Hey, Lending Club, one of the original fintechs to receive bank charter, had their earnings and market reaction was not good after the earnings. Now, this happened to be one of the stock that I like everything else, it's also down big time. So we will look into the earnings and see what went wrong, or is this just a market overreaction, and we will also look at what effect this might have on Sofi's earning. So without any delay, let's get started, and as a gentle reminder, please give this video a thumbs up. Also consider subscribing if this is your first time, and we also have a Discord community where we talk stocks, trades, market, and much more. Links are in the description below. So let me share what went wrong with Lending Club. Now, even though they had a beat on earnings, or most of the items were a beat, the forecast is where they missed. And as I have mentioned in my general market videos, that Q4 earnings won't matter, but going forward is what's going to matter a lot, especially for these companies. Future guidance is very critical, and all these young companies, doesn't matter if it's Sofi, Lending Club, Matterport, can they sustain the growth they had in 2020 and 2021 going forward is what matters for the market. So let me share my screen and let's look at the main reason for the sell-off. So number one, for the first quarter of 2022, this is when the earnings came out, Lending Club sees GAAP net income of 25 million to 30 million. So first quarter of 2022, not Q4 of 2021, but the first quarter of this year, they're seeing net income or GAAP net income of 25 million to 30 million. Estimate was 30 million. So they are now projecting lower, 25 to 30. For the fiscal year 2022 forecast, Lending Club sees GAAP net income of 130 million to 150 million, where the estimate was 175.3 million. So there's a drop in the GAAP net income from 175, now between 130, 150. So that was the main reason why Lending Club plummeted after the earnings, and that's the main reason why we have to look for Sofi very carefully on when they come out, what kind of projections they are giving out in the market. Now, if you look at the fourth quarter results from Lending Club, which is right here on your screen, these are all amazing. Look at that, 262.2 million, estimate was 245 million. So they had a beat on the revenue. Net interest income of 83.1 million, estimate was 78.9 million. So they had a beat here. Servicing portfolio of 12.46 billion, estimate was 12.65 billion. This is where they miss as one of the points. Now, this is all very interesting because Lending Club not only beat on most of the metrics, but they had a good quarter, but still the stock fell because of the future guidance. Remember, stock market is about the future and not about the past. Past is already priced in. Take a minute and think about it, what I just said, and then put companies like Sofi, Tesla in that scenario, and few other companies, of course. So now let me show you a chart that will give you some guidance on what to expect in the coming months and years from Lending Club, and then you can make a decision to invest or not. So take a look over here. This looks very confusing, but I will try to make it a little bit simpler here. So this is diluted EPS, and we are tracking all the way from 2014 to 2023 estimated over here. Right now, we are here. So we had a diluted EPS of 0.18 for 2021. In 2022, they are expecting diluted EPS of 1.64, and then in 2023, they are expecting diluted EPS of 2.59. Revenue, as you can see, we had about 818.63 million in 2021, and then in 2022 they are expecting 1.139 billion. Now, if you compare that with Sofi's revenue is going to be higher than Lending Club because they have so many more product, but the growth is also going to be higher from Lending Club because of course, so many different products that they offer. But look, in 2023, they're expecting about 1.388 billion of revenue from Lending Club. Loan originations, about 10 billion in 2022, about 12.92 or 13 billion, and about 15 billion in 2023. So there is absolutely growth between 25 to 30% growth in all the sectors Lending Club has in the next 2 years, which is of course very exciting. So I feel the stock price that we see right now, it's really a bargain, but so is everything else. So you really can't decide on what to buy, what not to buy, because everything looks like a bargain right now. If you look at fundamentals, or if you put fundamentals right next to them, everything looks like a bargain. Now look over here. These are all analysts. There are 8 analysts covering the stock, and everybody has a buy rating. Nobody has a sell rating. And then one person has a neutral rating. But look at the price targets right now. The most recent price target that came on January 26th was about $25 price target. If you look at where Lending Club is sitting right now, which is about like $15 to $16 after the recent sell-off, that's a huge gain if you look at it, right? Now, here's the thing. These analysts, they are coming out and they are downgrading the stock. I have seen at least 2 downgrades for SoFi in the recent times, and everybody is coming out and giving lower projections because just market conditions are so unpredictable. They're also saying that the loan book is going to decrease. That means people will take less and less loan because they're not spending that much money. They're scared. Recession, inflation, everything is out there. People are scared. They're not spending that much money. They're not going on vacations like they used to before. They're not buying things. They're not expanding their house. They're not spending money on their own. I'm doing the same thing. I'm not buying any stocks and I'm hedging, and my hedge is cash. Basically, save the cash and only buy what you really see a chance of buying. Sometimes that also doesn't even work. It just turns right around. So these days, the loan book is definitely going to increase as compared to last year. I mean, the projections that they had last year for 2022, it's going to change. People are not going to be taking too much loans because they just don't know. There's so much uncertainty in the market and also in life in general about we don't know where the job market is. We don't know where the inflation is going to be. We don't know what rate hikes is going to give us. So there is so much unknown in the market, and market does not like uncertainty or unknown. So there was this amazing article that I read on Goldman Sachs talking about the stocks, and also some of these stocks are in deep value right now. Like they're expecting Amazon to be $4,000. Look where Amazon is right now. And there's so much option activity going on for Amazon. So all these companies that we have, we know are amazing companies because they are, of course, doing what they were doing 2 years ago, a year ago, a month ago. They're also producing the same kind of value to the market as they were producing before, because all these companies are still amazing companies. Nothing changed for Apple, nothing changed for Google, nothing changed for Amazon, nothing changed for Tesla. They're still doing what they were doing a year ago, 2 years ago, when the sentiment or the market sentiment was so positive. So nothing really changed except some of the valuations, because now they're seeing that people are not going to spend money. So Lending Club is all about loans. That's why they're coming out and saying, you know what, people might not really take too much loans. Their loan book might decrease, and that's why these low price targets. SoFi, on the other hand, has so many other services. So I'm going to make a deep dive on SoFi to kind of show you what to expect from the coming earnings and also what to look for in the future guidance. So there is no doubt that we are in this never-ending market downturn, which is not going to recover very easily. I've mentioned that in my previous videos. And these conditions are definitely punishing stocks like Lending Club, SoFi, Matterport, which has amazing use cases for a great future, but they are being tied with this no profit, no mercy kind of movement. The pain will be here for a few days, and now all the eyes are on March Fed meeting when the real rate increase will come. I'm just hoping that some of these earnings can help lift the entire market, but until then, we are at the mercy of market makers and few big hedge funds. I'm not trading in stocks. I'm only investing in some quality names that I don't mind holding for a very long time. So no matter what you play, the market turns on you. So I'm doing a favor and hedging in form of cash. This report has given me a great insight on SoFi, and of course, as I said, I will be doing a deep dive on SoFi. So subscribe and hit the like button if you enjoy content like this. For one-on-one conversations, consider joining our Patreon and Discord. Links are in the description. As always, a pleasure to share all of this with you. Until next time, you all have a sparkling day.